Anyways, hey, good morning. Let me move my empty coffee cup from 3 days ago. Today is Wednesday, the April 29th, 2015. Welcome to your daily Forex trading strategy session. My name is Wayne A. I am your humble chief FX market strategist. Hey, yeah, I've been around the Forex markets for a long time, trading publicly in front of people for well over 10 years. So anyways, I'm here to help. We'll do some technicals. We'll do some fundamentals. We do these sessions every single day, starting at 7:30 in the morning Eastern time, which is approximately London lunch. Monday through Thursday, I'm at TradersWay.com. And on Fridays, we're at FX Street. Every single day, once the event is over, I upload a video to our YouTube channel so that if you missed the session, or if I've gone over something that was interesting, maybe it was a trade setup, or maybe it was some lesson that I do, and some of them are quite detailed. You might want to check 2 or 3 times. And if that's the case, either way, we archive all these videos on our YouTube channel, youtube.com/C for channel /TradersWay. And if you watch that video, please leave a comment. At least give it a like. I mean, come on, you watch a 1 hour video and you don't have 1 second to click like. So at least do that, pay it back, eh? All right, so overnight, what's been going on? The Saudi King picked a new heir, and it's me! Woohoo! Yes! Yep, I'm the new heir of Saudi Arabia. Awesome for me. So anyways, I'm looking forward to my palace. It's going to be good. I'm going to have a little party, get together. Come over to my palace. It's going to be awesome. Anyways, so I'm looking for that 100 billion trillion. Yep, today on the calendar we got GDP, and not sure what to make of it because it's not going to be good. Why is it not going to be good? Well, I'll give you an example. I go to a little school in Boston called Harvard, and I think it was the first 5 Mondays of the semester, classes were closed because of snow. Can you imagine in a Monday class, 5 weeks into it, you still haven't had a lecture? So the school was scrambling and stuff, and they got like the all-time amount of snow in the history of Boston. It's just like crazy. So imagine just the Northeast United States, just covered in snow. Business stops, and that's that. So that's going to slow down gross domestic product. So we'll see. So no one's expecting a good number. But that number cut out earlier today. Later today, the Federal Open Market Committee is going to sit down and discuss the policy, the monetary policy for the United States. And if we have a bad number, they're going to get that and maybe even discuss it or talk about it, or at least wink across the table, because they want to talk about it, but they don't want to be in the meeting minutes. So it'll be interesting. Like, what if, for example, they wanted to raise interest rates, but GDP was horrible? Could they raise interest rates, or would they raise interest rates if that GDP number was bad? I mean, how would they explain how they got to that? And also, there's no press conference today, so if they did raise interest rates in the face of current horrible GDP, I mean, it'd be such a mixed message, and the market would crash. And so, anyways, I don't expect anything to happen out of the FOMC today. It does say press conference. I don't think there's a press conference. I'm pretty wrong on that. I don't think there is. Is there? Anyways, if anybody knows, please confirm it. I don't think there is. Yeah. Yes, that's wrong. I'm right. That's how it works. Cool. So anyways, can't send a mixed message. So here's what it is. The difference between last FOMC statement and this one will probably be the change from moderate to moderation, from moderate to moderate, or moderate to moderately. So it's going to be a very small difference. I don't think we're going to learn a ton out of this. Maybe the meeting minutes in a few weeks. But like I said, based on current information, my best guess is next year. Now, I'm way out there. That's way crazy compared to what you would expect based on other market participants. But as far as I'm concerned, I'm right. Things may change over the summer, but we'll see. If anything, other people will slowly agree with me. That's what I'm thinking. And I have my reasons, because I look at the data and I don't see any reason to raise interest rate at all. And so people were expecting February and then April and then or the June meeting, and then it's not going to be June, it's going to be September. They're just going to keep revising until we find out it's not going to be till February or even June next year. Was it March? March of next year maybe would be my guess. So for that to happen, let's just make a quick comment here. For that to happen for let's say the March 2016 meeting for the Fed to raise interest rates, we'd have to have a ripper strong fourth quarter of this year, which means a really good Christmas, lots of buying of Christmas presents, all that kind of stuff, and the whole economy that goes with that, plus an improvement out of the Eurozone, plus an improvement out of China, plus. Could happen. Okay? Could happen. But anyway, so we'll see. No one else in the market seems to think that. Thailand cuts interest rates. Do we care about the bot? You guys like bot? You trade that bot? Yeah, I'm not a big bot trader. Right? I've bought. I don't think I've sold. But in any case, what's interesting is when the Chinese economy slows down and they change monetary policy to affect their economy, which generally speaking lowers the value of their currency, what happens to the community? Let's say their competition. There's other economies that also produce good products, manufacturing, stuff like that. And so if you were to be extremely general, let's say we looked at all of Asia as manufacturing and production and stuff like that. Well, if China changes their interest rate policy, like the RRR, remember there's lots of video, I did a video specifically on the mathematics of the reserve requirement ratio and how it mathematically impacts the monetary supply. You guys remember that video? We busted out the math on that one. Yeah, that was pretty cool. So they do things like increase monetary supply, increase in supply lowers the value, and so anyways, that lowers the value of their currencies. So now that maybe their products and services are cheaper to foreigners around the world, and maybe that will spur activity in the Chinese economy. But then what about all the other economies in Asia that want to do something similar? Like, I don't know, Thailand. And suddenly, Thai products are more expensive to foreigners relative to the Chinese products. So if Thailand wants to compete with China for that business, the Thai central bank should also lower the value of currency just to compete with China. If they're going to do that, they probably need to cut interest rates. And they're even surprising the market by cutting interest rates more and more and more and more and more. But notice that it's simply because China cut interest rates and adjusts their RRR. And if China's going to do that, their competitors are going to need to do that too. And Nuno says currency wars. Yeah, absolutely. If China's going to cut, they're going to cut. So anyways, Thailand sitting around watching what China's doing and thinking, you know what, we need to compete, we're going to cut interest rates. So that's not necessarily a good outlook for China, is it? But we need to look even farther than Thailand, because Thailand needs to eat today. Right? They're not looking 2 years down the line. They say, if China cuts, we got to cut now because we're negotiating deals and all that kind of stuff. I look out a little farther because I can, I have that luxury, and what I see is when Europe comes back, gets back on board, gets their economy moving again, that's going to boost demand from places like China and Thailand for their products and services. And when that's the case, their economy is going to spur, it's going to spur their economies. Inflation's going to kick up in those economies. Interest rates are going to go up. Currencies are going to go up, so on and so forth. Rising tide raises ships. Okay? So anyways, it's just interesting. I wanted to talk about that. Sweden is the other way around. Now, they didn't cut interest rates, but they expanded quantitative easing. Any particular reason why they had QE and not cut interest rates? Does anyone know the official interest rate for Sweden? Anyone want to Google it for me? Yeah, somebody Google it. Okay, and then Eurozone private lending rises for the first time in 35 months. Woohoo! Good job, Europe. Hey, but that's what QE does. Yeah, Adam's got it. Negative 0.25. I think they're kind of sick of isn't that crazy? Minus 25. So they're like, we've cut it negative and we're still having problems. Holy smokes. Well, how much more do you want to pay people? Or not pay people? I don't know. Anyways, so so they're just like, you know what, minus 25 is fine. We don't want to make it minus 50. So we'll pump more money directly into the system. And force people not to save. And that's what they're doing. But anyway, so what did I say before? I would like to see the Eurozone improve, and then once their economy improves, they'll start purchasing foreign products, and when that happens, those foreign economies are going to improve, and then globally, everything rises. Well, look, first time in 35 months, lending has gone up. Well, you know what? I'll take that. That's a start. Hua? That's a start. So let's get some more. All right, let's get some more. It's a good start. Quickly around the world, we're looking at here British pound. Over the last several hours is kind of up and back around. We got the euro here quite strong, Swissy quite weak, Japanese yen very weak. Ooh. Dollar, US dollar down here, even weaker. All right, so dollar again, very, very weak. This is Aussie, moderately strong. CAD, weak. Wah, wah, wah. CAD is a big loser. And Kiwi, big loser. So what's going on? Where's the surprise here? Aussie is either unusually strong or these other two are unusually weak. But, you know, if two commodity currencies are weak, then we'll say that Aussie's, you know, a little bit overbought. Maybe we should look to sell that at hardcore resistance. So let's look there. Biggest winner here is euro. So euro dollar, euro yen long. Those are the best trades. Okay. And then on the calendar, as you know, we got some GDP That's the biggie. Okay, personal consumption, fine. That you know, we want to see a high number there. People spending money and all that kind of stuff. There might be a pop, you know, based on all this news, but the big news today is going to be FOMC, obviously. All right. Pending home sales, that'll be interesting. So, you know, you kind of got your 8:30 news, and that'll come and go very quickly. The GDP is more important than personal consumption, but then we've already discounted the number in GDP. So if it's actually a good number, it's going to be very good for the dollar because everybody thinks it's going to be bad. So if it's actually good, it'll be great. Okay? Personal consumption, okay, important, but I think is overshadowed by everything else. Pending home sales is important, very, very important. So we want to see a good number there just to keep the trend going. Okay? So that's nice o'clock. And then look at this. Let's go to Asia now. Zip, 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 zip. Tonight, Asia is going to be a good trading session. Watch the Aussie, watch the Kiwi. Especially with the Kiwi so weak right now. Interesting, huh? Let's get technical. Let's get technical. Technical. I want to get technical. All right. So that's where we are now. Let's take a good look at gold here. Let me clean up my chart. And elevated. And to me, still just trending sideways. Still just not interested. It's elevated but oversold. So I guess what I would want to see now, let's zoom in. What I'd like to see here is double top and drop. Obviously, that's going to be affected by both the GDP number today and the FOMC number today. So all news dependent. Take a look at oil here. What's the trend? Have we topped out? Cool. So I need to adjust, right? Now remember, I wanted it to go up a little higher. I still kind of do. Do you notice the divergence stuff? Let's get technical, technical. I want to get technical. All right. And yet it's not rising, it's not falling. So, you know, you really kind of want to arc it up like this. But there's no reason to do anything here. So lower low, lower high, or if it makes a higher high, let it go a little higher, then sell it. That's what I was thinking. You got it? Let it sit in the middle here. I'm not interested. Talk about yesterday when you're range bound, you buy it at support or you sell it at resistance. Okay, only a fool would trade it in the middle here. All right. That's oil. S&P 500. Let's zoom in. Boop, 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 boop. Okay. You see that day? That is a beautiful sell. Beautiful sell. Lower low relative to this low and set it up. Where does it go? Lower high. Old is now resistance. It's also approximately 618. And this is a beautiful fractal drop. And we already have it set up to drop. You see that? If I back out, we already have it set up to drop. So this is the big drop, the lower high, lower low, and then maybe the lower high, lower low one more time. But I don't want to go below this line here. Okay? So one of these should rise on the longer term. Okay? Just remember that this is the all-time high. So what's the risk of it? FOMC. Take profit, take profit, take profit, take profit. Okay? And then once the dust settles and the Fed doesn't raise interest rates, money stays cheap. Up, 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 up. Ugh, coffee's today. Should slap around my minions. All right. See how clear this one is? This is trades within trades within trades. Yeah. I think what we have is a drop to support, a rise to extend the drop to this zone, then a rally up, then a higher low, higher high. And this mess is just trying to catch up. This over here, there's two different plans to fall, but either way, we have backs coming down to this area and then up. Now, after these big bottom moves, when we hit consolidation, why do I always have it coming back like this? Do you ever get caught in scenarios like this? Like you wait for it to have these huge rallies, and you're like, 99 confirmations here that this is going to go up. So you go, and then it stops going up, and then it stops falling, and you're like, what is going on? Well, the market needs, the market requires, so to speak, these pullbacks. So the trick is to know when you get it enough that it needs to come back to the moving averages. It's a mean reversion. Sort of where and when and why, and then you got to use the short-term technicals to sell it down to the area people would like to buy it back. Okay. If you're having Forex problems, I feel sorry for you, son. I got 99 problems, but a pip ain't. It's like my all-time favorite song. So anyways, just be careful. So this lower low, lower high should predict a lower low, which just gets us to the 382 long. Funny thing is that goes back a few weeks now. Okay, cool. I'm going to open up my pound yen, and it's going to ask me for pound dollar. Jenny, are you typing it yet? Jenny's like, what about the key? So we can do that. Just read Jenny's mind. All right. And I think what our next target was this elevated gray zone, right? But that's probably next week, and I say that because we'd have to blow through pivots. Now, when we have such news events, GDP and FOMC, you can get through the weekly pivots because that's unusually important news, and pivots are just based on what happened last week, which usually is a usual market. So we could blow through that, but still I'm not interested in trading in the red zone unless I'm selling. You hear that? But yen is weak and pound is moderately strong, as you saw. Okay. So if I were to sell it, I would want to kind of sell like that. I just, I don't know if I can today. I'm sorry. I'm more of a trend trader than a counter trend trader. Counter trend trader would be selling in here. You got the midpoint cycle level. You got the weekly R2. It's all good. I'd rather buy the dip. That's what the 21 is. So I think what it'll do is probably hesitate in here for a while, but GDP and FOMC can change that. So how about let's revisit it around, I'll accept 84 as a sell zone. Let's go back to what I had before. Yeah, off of this, let me readjust it. I'd accept that, 84, and then, it is a little higher. That is the zone. So cautious, right? I'd be cautious on this one. Up in the here, then you would look for a reversal. So to make this easier, what if this was a 7, what color should I make this rectangle? Are you thinking rosy brown? Yeah, me too. If you were going to put red, you're wrong. It's rosy brown. All right. So anyways, I'll just leave that as a note. But you know I'm a bull, sorry, on the bearish band. Okay. Now we've got our breakout projection. And we've hit our area. And we're at 110. What do you think? Well, I'm thinking if we had a good GDP, even though everyone's thinking about GDP, we might get a sell here. Is it set to sell now? No. What does a sell scenario look like? How about 100 retracement? And then how about 80% retracement of that retracement? Then how about down to 200 EMA? That's what I'm talking about. Okay. But after that, if it doesn't work at 110, I'll try to get it at 111. If it doesn't work at 111, I'm going to take a break. Even 111 is too high. 110.50, sort of up in here. So it's either 110 or 110.50. Okay. So that's what I'm waiting for. That's what I'm going to do. I've got my hands in my pocket, got my fingers on the trigger. Okay. Yen yen. What was the plan yesterday? Can't sell that support. Remember that? So what was the plan? If you can't sell that support, you buy it at support. Now at resistance, you can't buy it at resistance. Any chance somebody's going to sell it there? Could be a rabbit, could be. And then the next part is, if it breaks up, we'll wait for the retracement back. If it breaks down, we'll wait for the retracement back. Otherwise, buy it, call it resistance first. When you're at support or resistance, then wait for the oscillators to build. If you remember, we adjusted the stochastic oscillator to show 85.15, which means you may even consider buying or selling unless it's 85% overbought or 85% oversold. That's pretty conservative, isn't it? But let's say the USDN had 75% oversold for approximately 12 hours. And then the London boys come to work. They sit down at their computers. They boot up their trading platform, sipping their tea. And they open up their chart and they say the USDN oversold at support. What would a professional London trader do? What's their first trade of the day? Thank you, Jenny. Yeah, I mean they're like, what are we going to do today? Oh well, 75% oversold. I'm at support. We've been there a long time. I think I'll buy it. Cycles up. Done. Okay, time of day, right, Daniel? Sometimes it's helpful to actually think. This is why I try to paint pictures, right? The London professional trader going to the office in the morning, sitting down at their desk, firing up their computer, booting up the trading platform, sipping on their tea. Did anyone get some sort of image when I spoke these words to you? Did anybody? Nobody. You couldn't see a trader sitting at the desk in the morning? And they're looking around for the first trade of the day. No? I guess I didn't put enough effort into it. I want to paint a picture. Okay? Because I want, because you'll now save the information visually in your brain. Because if you think of it, as far as your brain's concerned, you saw it. If you saw it, it's real. Okay? Because I want you to think about it that way. Like, I want to have a trade, let's say, an hour before those London traders show up to work. You understand? I would like you to be in that trade an hour before those London boys show up. What's their first trade of the day going to be? Couldn't you base part of your trading career on front-running the London boys? You ever think of it that way? I totally think of it that way. What are they going to do? Remember, I always talk about it. You got to think ahead. And sometimes you're thinking about, when you're a bull, what the bears are going to do. What's the first trade that a London trader is going to make at the beginning of their trading day? They look at their chart. Are they going to buy at support, or are they going to sell it at support? What currencies are they going to? Well, let's see. Euro USD, 60% of the entire Forex market. USDN is close to second place, probably, but half of that, right? I don't know. And then pound and so on and so forth, right? You got to stick to the majors. Okay. Yeah, I think it's like Euro USD, USD yen, pound dollar, right? Something like 90-something% of the entire Forex, right? Polish zloty, not a major. Nothing wrong with the zloty. Okay, but you want to just say, well, what are they going to start with first? Are they going to tiptoe into the zloty? Or are they going to tiptoe into the USD yen? Right? Well, they're going to look at your USD. They're going to look at pound USD. They're going to look at USD yen first. Even if they don't even trade them, they're still going to look at them. And then they're going to say, well, which ones at support that even a blind man can see, or which ones at resistance that even a blind man can see? And that's that. They take the first trade of the day. That's that. Where it goes, nobody knows. But it's not going to go down, because now you have to think about it. Is it one London trader? Is it 10 London traders? Are they trading, 1,000 pound account or 100 million pound accounts? Okay? And so that's it. I spent a lot of time just thinking about that. Time of day. So anyways, that's a beauty, right? So if you look at yesterday, not quite in the right position. Open, but here. Look at this one on Monday. Asia Open, nothing. Tokyo Open, but generally nothing, right? See, this big spike is probably Shanghai Open and stuff like that. Wait. London open, boom! Yeah! New York open, boom! Yeah! Up, down, turn around, 50 pips of profit. Up, down, turn around, 50 pips a day. Oh, but only 50 pips of profit. Up, down, turn around. Right? So anyways, whoopsaw. But anyways, look at Asia open, nothing. London open, boom. New York? What would a New Yorker do? Okay. So anyways, always think about the other traders, guys, because you can't move the market, or at least I can't move the market. So somebody's going to move it, and I need to think about that. Okay. Now, we've been tracking this for a solid 2 weeks now. When we were down here, we thought it would go up into here, and then when it got to here, we thought it would go down. Very nice. Lower low, lower high, lower low, maybe a lower high, lower low, we'll see. At some point, it's going to hit reasonable support, and then you're going to want to fit that fib. Okay? And then you may even want to fib the larger fib to here, and maybe even here. And start looking at rezones. Okay? So you see the overlaps here? So don't be shocked. I'm not predicting it. I'm just, let's go over price action. Okay? Because we're so... Okay, this is what I'm looking at. You see how oversold the oscillator is? You see how close we are? Role reversal. So what if it goes higher? Okay, now we have a higher high. Higher high is going to predict a higher low up into here. But now we have macro move. And you know what? I'll even be tougher on myself. We'll get one of these, and we'll even go up here. And now you have the macro move. Okay, something like that. Okay? Not quite ready to say that. But it could happen. Guess I should be using my drawing tool, huh, instead of all this. Yeah, next time, huh? So you take the micros and the macros. That's just simply called fractal geometry. So no matter what time frame you're on, you're going to have time on the chart. That's all the charts are. Okay, you're only changing your point of view. But all the information is the same, just the point of view is different. So if someone's looking at this on a daily chart, going to trade it slightly different from those that are trading it on certainly a 50-minute chart, all right? But no matter what chart you're on, the Euro USD is worth the same. And all this information you see on these 15-minute candles, they're in the 4-hour candles. All right? All that information's there. And that's what a fractal is. They're just pixels, right? So anyways, that on my mind, but wouldn't worry about it until it develops. But, you know, I can start creating plans for it, right? But at some point, wouldn't you at least expect, at a bare minimum, something like this? But anyways, that's a nice trade. We discussed this trade when we were in the middle of the range. It took quite a while for it to break out. Then it broke out, and we very casually and calmly discussed what the next move is up into here. And that would be the sell. And then it went up there, and then it rolled over, and then it's just moving. I mean, these are swing trades now that are lasting a month. And it's just not complicated, right? I don't think we made this a big complicated trade. Right? I don't think it's overly complicated. I know there's no like big rah-rah speech like, yeah, sell. But we just talked about it up here. Like, look, you're in the middle. You don't need to trade. But let it break. And when it does, don't worry about it. You've got tons of time. Let it come back up into here. And then you sell it. Nice and calm. Just you know, it should be just like doing your job. Hey, Jenny wants to do British pound versus the USD. Jenny and the pound are like peas and carrots. You having a good time, Nuno? Right on. All right. Very similar to the pound yen. I wonder why. Okay. Now notice this was our target from a previous trade. Up, 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 higher, high. Okay, remember we talked about regiment? Do you guys have a picture of that in your brain? Where I said you're sleeping in a hammock at the belly of a battleship, and also you minor battle stations, and you have to get up and run, and you can do it in the middle of the night. Your eyes still closed, and not hit your head on the metal doors. Does anyone remember that? Okay. And what was the routine? A high sets up a higher low. It has now gone from a 382 to a 1618. Well, what does a 382 predict? It predicts a 1618. We just hit our target. You see how plain and simple that is? Not a problem, right? Textbook. So can you buy it here now? Oh, you could, but you'd be foolish. What you going to do? Well, you can't sell it at the 21 either. You see the 21 EMA on this hourly chart? The 21 is a buy zone. So if you bought it here, you're really late in the game. And I don't think you have any discipline. Yeah, it might go up. I don't care. First of all, you're at a sell zone, or what I call a pivot profit zone, because you're supposed to be getting out, not in. You also have divergence. So I wouldn't buy it here if I were me. This black line that looks like support, the target, yo! Why would you be buying at the bullish target? Come on, have some discipline, right? Can you sell it on the 21? No, because it's still, for those that don't use pivot points, the area to buy. Look at the old resistance, now support. So if it were going to fall, and that's the GDP number coming out, if it were going to fall, you'd want it to do one of these things. So you make it a double top since it's rising. And then what? Down to the 55, not where the 55 is now, where the 55 is going to be in the future, because the 55 is rising. Then it's going to hit 55 and then do what? It's going to double top, so it's going to create a triple top now. Then it's going to do one of these, retest again the future 55, because then the 55 is going to be here, right? But it's going to be a second or third test of the 55, and it's going to break. And there's your reversal. And that'll be, I don't know, what is this, an hourly chart tomorrow? When it open tomorrow? Could be, right? Could be. If you were a hardcore bear on this one, and there may be hardcore bears, do it this way. Okay, that's an hourly chart. If you're going to be aggressive on like a 5-minute chart or a 1-minute chart. Zoom in and look for a reversal right in here. Someone hardcore would sell it right at 54. Done. Now, that's a scalp, and you're going to have to give it lots of time because I think it's going to triple top. But you could scalp it. It's 54. It's the R2. It's where bulls are supposed to get out. Okay? So if you're going to hunt their stops, you scalp there, and off you go. Now, I find that, again, a high-risk, low-reward scenario. I wouldn't do that. Okay. But someone will, and someone did. But there's got to be something better than that. That's very aggressive. So at least, find some time frame you could trade, and at least wait for a pattern of some sort. Really, you have to be that aggressive, okay? But yeah, you could sell at 54, put a stop up there, just pray. Done. That's a true scalp. Couldn't you at least wait for a double top, a 1-minute chart? Like really? Not even on a 1-minute chart? Right? Yeah, oh, I forgot to mention the 10-year. Did you notice we got over 2? Finally got over 2. Isn't that nice? That's good for the stock market, isn't it? All right, so anyways, GDP, negative. Is that right? No, sales are negative. X motors, X what? So what's the actual headline number? Core deflator PCE. Ooh, look at that. Negative PCE to 2.0. Wow, that's bad. This is, what's the actual just headline number on the GDP? GDP, consumer spending, wow, down. GDP sales, GDP X motors, 0.2. Okay. But look at some of these numbers, huh? Now, the CE is something that the Fed, I don't think the Fed really pays that much attention to GDP as much as it's stated, but the PE is important to them, and wow, I mean, it's bad, man. Core down -1%. Oh, did you see the knockdown? Who is it? Fitch dropped the rating. Boy, I wonder if tomorrow we're going to get a surprise out of Japan before the summer hits. The Bank of Japan or the government, some sort of stimulus, monetary easing, or some sort to get them through summer. Nobody caught the downgrade? All right, so cool, very interesting. No increase, or let's say, no need for the Fed to raise interest rates. That will weaken the dollar. Now remember, the dollar got very, very, very strong, very, very, very quickly because amateur traders with dollar funds thought the Fed was going to raise interest rates, and I still can't figure out how they thought that. I just still can't. I can't find data that would support that. And yet you listen to like the TV shows like ABC and Bloomberg, and they have all these billion-dollar fund managers come on like, the Fed just has to raise interest rates. The Fed is being irresponsible. What? I don't see the data that says that, but they all say it. So anyways, I must be the one that's the idiot, and I don't deny that. So we'll see where this comes from. The dollar was very, very overvalued, and the euro obviously was weak, and rightly so. I think the euro was properly priced. I think the dollar was overly strong. But you know what this does, though? This just now lets the euro at 115, and then I'll sell it there. You kind of have to line things up, with summer and all that kind of stuff. So we'll see. So it comes back down to like, well, when's the Fed going to raise interest rates? Is it going to be June or September? Well, June doesn't feel right anymore, especially with that bad number, right? Because, let's talk about that, and then I guess we'll need up. But the Fed, do you think the Fed needs one good, say, one unbelievable NFP or one unbelievable GDP? Do you think one is enough? Oh, Jenny, yes. Term in the next few months? Not necessarily. We'll see. Remember, the Fed's data dependent. But anyways, so what does that mean, guys? One good GDP, the Fed's got to just raise interest rates. One not front payrolls, the Fed has to raise interest rates. Do you think one is enough, guys? One data point a trend does not make. And once told me. Okay, so how many, right? 2? 3? Wouldn't the Fed need like 3 decent GDPs in a row? Because the Fed can't just like raise interest rates, lower rate, raise and lower, raise and lower. Like, don't you think we need at least 3 decent quarters in a row for the Fed to say, all right, we get it. There's a lot, inflation's there, jobs there, spending's there, everything is moving along. We're worried about bubbles, the housing prices are because people are making money at work, and people that want jobs have jobs and are high-paying jobs, and like, whoa, all right, so we did our job, time to raise interest rates, right? Don't you think that that's the history of the Fed? I mean, anything, the central bank is slow as molasses on a Georgia meeting. Okay, the only history that all the major currencies, the only central bank that has a history of being aggressive, I would put as the Reserve Bank of Australia. Okay, raise interest rates up, and then they'll say, oh, they do like then they come out like, how many other times have you heard a central bank say, you know what, we think currency's worth 1,000 pips less than it is right now. Never. RBA does it all the time. So if you look at the history and reality of the Fed, come on, dude, 3 good quarters in a row, right? That's why I'm not even thinking this year. We just got like a pathetic GDP. What? The Fed's going to jack up interest rates now? It's not Japan. Japan might do it. That's their personality and history, right? Wait for things to then jack up interest rates. Sorry, Japan. But that's the history that the Bank of Japan has. I didn't create that up. Right? I didn't create that. I didn't make it up. So that's that. So anyways, bad GDP, they're not going to raise interest rates anytime soon. Don't worry about that. But what you're seeing now is the US dollar was overvalued. Fine. So because the market was so unbelievably net short Euro USD, Euro US going up, but they're not necessarily buying Euro, they're exiting short positions. So at some point, somewhere, sometime, probably not today, but sometime, I am going to get heavily net short Euro USD again. What do you think? Smell like a plan? So I'm immediately going to upload this video to youtube.com/C/TradersWay to our YouTube channel. So if you're watching this, or you know what, it takes me about an hour or so for this to be there. So why don't you watch yesterday's and leave a comment? Just a review and leave a comment or leave a like or do a share on yesterday's video, which was over an hour long. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. Thank you for being a client. We did cover Forex. I did go over oil. I did go over gold. We did look at the S&P 500 and very quickly at DAX. We didn't do any binaries. I didn't want to get active trading with FOMC in front of us, but maybe tomorrow, if you ask, we'll scalp using some binaries. You like some scalp? We can scalp. Peace on earth. May the pips be with you. May your profits be above average. Cheers.